remember, you're directed by the Privacy Act. It shows you how important this is. You're directed by the Privacy Act to check out Section 6001 and 6011. They tell you only have to comply with regulations. You try to find the regulations involving the payment of income tax, but there aren't any. So what have they again told you? Don't have to pay income tax. Remember I told you a long time ago, a lot of people have been sent to jail. We knew you didn't have to pay income taxes. We knew that, so a lot of people didn't file, but they hadn't developed the techniques that we have developed today that would allow you to obey the law but protect yourself at the same time from the criminals that are actually operating, because most of them work for the federal mafia. And we got to remember, organized crime in America begins with the federal government. Now, in order to be able to stop paying income taxes, even though there's no law, and to protect yourself, there's 4 things that you should know. 2 of them you already know. 1, there's no law making you liable. There's no law requiring you to pay. The other 2 things you're going to know so you can intelligently stop your employer from taking taxes out of your pay and filing a 0 return is income taxes have to be assessed, just like property taxes. And secondly, you're going to have to know that the meaning of income means a corporate profit. So nobody here earns any income. And the reason you don't have to pay income taxes is the tax hasn't been assessed. So there are really only 4 things you really have to understand in order to deal with the federal government. A, you know that there's no liability. There's no law requiring you to pay. You've never been assessed if you don't assess yourself. And you earn no income, strange as it may seem. Okay, now on page 61 of the Federal Mafia, I produced 2 sections, section 6201, section 6203, and on the next page, on page 62, we reproduce section 6303. Now, when I used to go on talk shows and I would visit bookstores, I would go in and I would say, now if anybody comes in for a tax book, ask them if they want a fiction or nonfiction. Because mine was the only non-fiction tax book. And then this is the only tax book where I actually reproduce the law. You go to any other book on taxes, they tell you what the law says, but they don't reproduce the law. You can read the law for yourself. I may try to guide you, but there it is. Now, what does Section 6201 says? This is very important. We're going to come back to it later. It says the Secretary is authorized to make the assessments of all taxes. And they're going to be an assessment. Now, if you look at Section 6203, it says the assessment shall be made by recording the liability of the Secretary, and upon request of the taxpayer, the Secretary shall furnish the taxpayer a copy of the assessment. Now, those of you who pay taxes in 98, if you haven't filed yet, have you been assessed yet? No. Well, if you haven't been assessed, on what basis is the government keeping your money? The Supreme Court, Bull versus the United States, says until the tax is assessed, you don't owe it. Now, the way the government misleads and cons the average person, he doesn't know this thing. Now, he sends in a tax. Suppose last year you allowed $10,000 to come out of your pay. But you haven't sent in a tax return yet, so there's no assessment. Now, when you send in a tax return swearing on the penalty of perjury you owe the government $10,000 in taxes, why shouldn't the government believe you? So now the government will take what you swear you owe, will enter it on the assessment rolls of the government, will make an assessment of that amount, then apply against the assessment all the money you've already paid. And then the trap is closed. What we're going to do is we're not going to, the Venice fly trap. We're not going to assess it. Now, here's the funny part about it. Now, let's go to Section 6303, which is shown on the next page. It says, where it is not authorized, it says, the Secretary, after making the assessment, shall give notice within 60 days after making the assessment, give notice to each person liable for the unpaid tax, stating the amount and demanding payment. So technically, if you owe an income tax, the government is supposed to assess you and then send you a bill. But they don't have to. When you pay it, they don't have to send you a notice and demand because you paid it in advance. And then you assess yourself. So that's why you don't have to get a notice and demand for payment. But, so we are not going to assess ourselves, and this is why we can file a tax return and get our money back. Now, the other thing which is very important for you to understand is that there's nothing in the Internal Revenue Code that taxes, wages, or dividends, or alimony, or anything else. Now we're going to come to the very heart of the matter. I'm going to go over it with you, the most misled, the most misleading section in the whole Internal Revenue Code. Now, everybody, of course, a lot of people believe that the income tax is related to the 16th Amendment. The 16th Amendment says Congress shall be able to tax income from whatever source without apportionment. What prevents the government from taxing wages is the apportionment provisions of the Constitution. We don't have time to get into that. That's explained in detail in the Federal Mafia. And this is a very important book I wrote in 1985 called The Great Income Tax Hoax. And what I'm telling you now occupies 2 chapters in The Great Income Tax Hoax. One, why nobody can have taxable income. And income, what does it mean? Okay, now the first thing we'll talk to you about income is that on page, in the Federal Mafia, okay, on page 42 of the Federal Mafia, there are 3 court decisions mentioned. United States versus Ballard, and the citing is given. Eisner versus McComber, Spreckle Sugar Refining, and Merchants Loan and Trust Company versus Schmitanka. The first case, United States versus Ballard, admitted the general term income is not defined in the Internal Revenue Code. How about that? Now, if we have an income tax, how can we have a law that taxes something that the law itself doesn't even define? Which means the law would be unconstitutional, be void for vagueness anyway, because if you look on the right-hand side, the Supreme Court in the Spreckle Sugar Refining case said, a citizen is exempt from taxation unless the same is imposed by clear and unequivocal language. Well, how can you have a tax law that taxes something that the law itself doesn't even define? So don't take my word for it that the income tax is income, whatever is income. See, income is an abstract accounting term. And what it does is measures cash flow over a period of time. And any accountant will tell you, just by changing your inventory valuation, you can change income. So it's an abstract term. So what is it? Notice the 16th Amendment said the government can't tax wages. It doesn't say dividends. It doesn't say out. It says income. The question is, what is it? Now, this is very interesting. The next case I cite is Eisner versus McComber. And in that case, now you're going to know why income is not defined. The Supreme Court said that Congress cannot define income, because if it did, by doing so, it will alter the Constitution by legislation alone. In other words, the word income is used in the 16th Amendment. Now, if Congress changed the meaning of income, like it does every couple of years, what is it doing? It's altering the Constitution by legislation. It can't do that. Whatever income means in the Constitution, the Supreme Court had to define what it means. From that point on, all the government can do is change the tax. But it can't redefine income. If it redefines income, it's altering the Constitution. This is why you really can't have a flat tax if it were compulsory. Because under a flat tax, you're not going to be able to take depreciation, let's say, check. So they're changing the meaning of income as it appears in the Constitution, and they can't do it by legislation alone. Okay. So what did the word income mean? And you'll see the most extensive definition of the meaning of income is in Merchants Loan and Trust Company versus Schmitanka. And they said as follows. This is the tail end of the definition. It's more extensive than this. There would seem to be no room to doubt that the word income must be given the same meaning in all of the income tax acts of Congress that was given to it in the Corporation Excise Tax Act of 1909, and what that meaning has definitely become established by decisions of this court. Now, if that sounds complicated, I'm going to simplify it for you very quickly. Basically, what the Supreme Court said is income means profit. That's what it means. And since only corporations have a profit, only corporations can have income. In essence, we don't have an income tax, we have a profits tax. And I can prove that very quickly, and any accountant or lawyer will admit this very quickly.
So, let me understand that. If you're not a corporation and you have no profit, you've got no income.
That's exactly right. And even if you're a corporation, let's say corporations can have millions and millions of dollars worth of income. Okay? Do they pay income taxes? No. Only if they have a profit. They pay the tax on the profit, not on the income. Well, if they pay the tax on the profit, not on their income, what kind of a tax is it?
Profits tax.
It's a profits tax. And individuals don't have a profit. Now, to show you that this is now now when the law was first passed in 1913, the revenue statutes, actually they tried to tax wages because Congress thought in the 16th Amendment that they were amending the Constitution. But then the Supreme Court ruled in the Bruchaber case that the 16th Amendment did not amend the Constitution. What they ruled is that what they did is that the 16th Amendment established the income tax as an excise. But it's not imposed as an excise. It's imposed as a direct tax. And then by 1921, they defined the word income to mean a corporate profit. So all during the 20s and 30s and 40s, up until 54, the tax was collected in violation of what the Supreme Court said the word income actually meant. So somebody must have noticed this, and they changed the Internal Revenue Code. They went from the 1939 Code to the 54 Code. And in the 54 Code, they took out all of the mandatory provisions, and they changed the meaning of income in the 54 Code, so only a corporate profit would fall within the meaning of income. And now if you look at Section 61 on this document, Section 61 says gross income defined. Okay? Now, it's shown in the Federal Mafia on page 95, gross income defined. Now, I already showed you the amount of deceit employed by the federal government to collect the tax. Now you'll see the amount of deceit employed with misleading the public into the meaning of income. Now notice it says gross income defined. And now, if I wanted to confuse you, and if you left this seminar, this lecture, and I said to you there's nothing in the law that says rents are taxable, or dividends, or interest, you might go to a tax lawyer or to an IRS agent, and he would say, well, Schiff is misleading you. He could take out Section 61 and say, look, gross income means, look what it says, it's a tax on interest, rents, royalties. You see all these things that are listed? Yes. And he could, and it says right here, compensation for services. That means wages. Therefore, your wages are taxable. And you could be misled into believing that our internal revenue laws, but let me just show you how misleading this whole section is. First of all, it says gross income means all income from whatever source. Now, in the 8th grade, you should have learned that you can't define a word using the same word in the definition. How can you define gross income by saying it means all income? If I were to say, I'm going to tell you what a big fliglet is. A big fliglet is a fliglet only bigger.
That's a damn big thing.
Oh, would you know how big a fliglet is? Now, the first thing the government would have to do is define income. The 16th Amendment doesn't say anything about gross income. It says income. Well, what's income? The government knew it couldn't define income. So it would mislead the people that pretending to define gross income. It said gross income means all income, but when income is not defined, then gross income isn't defined, then taxable income isn't defined. However, we do know what the word income means. It means profits and gains. That's what the Supreme Court said it is. Now we substitute the word profits and gains when we see income, and gross income means all profits and gains. And the key word there is from. It looks like the government is putting a tax on rent. No, they're putting a tax on profit from. Now you'll see above this I have a corporation profit and loss statement. Now there's a corporation that has $395,000 worth of income, right? But now it has deductions of $394,000. It only has $1,000 in profit from these sources, and since it has a carry forward loss of $1,000, it pays no income because it had no profit from these sources. Now let's look at Mary Brown, who works as a receptionist. Is she paying a tax on income from? No, she is paying a tax on, because look what Mary Brown's income, alleged income is. Well, she gets paid wages of $13,000, interest of, she made interest on $14 on, she has a savings account, and she has 10 shares of stock given to her by a grandfather, $50, and she won $16 in the office football pool. So according to the IRS, that year she made $13,000, $16. They want to tax her on that, don't they? Are they taxing the gains? As a matter of fact, if she were a corporation, see, a corporation deducts everything. Now, if she were a corporation, she could deduct her rent. Corporations deduct their rent. Now, it's funny. If you were trying to deduct your rent, they'd say, no, that's personal expense. But as you women know, when you get up, you have to shower, you have to make up, and you're trying to sell your labor. Incidentally, are you self-employed? well, when you ask people who work for wages, they generally say no. Everybody's in business for themselves. Everybody's in business. If you work for General Motors sells its product to a number of people, but you sell your product, your labor, to General Motors. So everybody's a business, just like every other business, except you find you make more money selling what you own to one employer. But everybody's in business for themselves. So basically, she can't deduct her clothing, but if she were a corporation, she'd deduct everything. And what would her income actually be? $2,000. So is she paying a tax on profits from her? No. Now, proof that wages aren't taxable. When it says compensation for services here, a corporation can receive compensation for services, but a corporation can't get a salary. And when it says compensation including fees, commissions, and fringe benefits, why don't they mention salary or wages? But when the government defines what is taxable as income to Americans living overseas, which is in Section 911, or non-resident aliens, it specifically says that to an American living overseas, wages and salaries are taxable, and because the Constitution and the proportionate provisions of the Constitution don't apply overseas. So here's what Americans have been doing. Americans have been paying taxes on their wages when the statute says you only pay tax on gains and profits from. The key word is from. So now you've learned that you have no income, you're not liable, there's no requirement to pay. So now there's two things we have to learn. How do we stop paying income taxes, and how do we get back all the money we're duped into paying? Now the first thing we want to do is stop having taxes come out of our pay. Now the government knows that they can't take money out of your pay without either a court order or your permission. So they got to trick you into allowing your employer to take money out of your pay. Now they have what they call the W-4. And on page 155 of the Federal Mafia, you see the statute, Section 3402. And that statute says every American has a right to claim exempt from withholding. All you have to do is give your employer a form saying I had no income tax liability last year and I anticipate no liability this year. And the law says he shall not be required to deduct. Now, if you don't do that, if instead of claiming exempt, you write 1, 2, 3, 4, 5 withholding allowances, you're actually directing your employer to send money to the government for a tax which has never been assessed, for which you have no liability for, because you just like telling them to send money to the community chest or the Red Cross or buy government bonds. In order to trick you, for 30 years, as you will notice in the book, on the W-4 shown in the book, it says if you entered exempt, are you a full-time student? Now, you'll see there's nothing in the law that says you got to be a full-time student. This is how the government misled the public for years into believing you had to be a full-time student. Now, when this book came out, I pointed out that that was a fraud. And a year later, that line was off the W-4, so that line doesn't appear. Now, I can't take specific credit for getting the line off, but it was really strange that it was on there for 30 years, and after my book came out, they took off the line. Now, when you claim exempt, however, you should turn over the back of the W-4 and on the back write, this form is not being filed voluntarily. If I didn't file it, I couldn't get paid. That's so the government can't use the form against you, and people have been prosecuted by filing false forms. This renders the form useless for prosecution purposes. Now, sometimes when you claim exempt, the IRS will write to the employer and tell the employer to disregard your W-4. That's a violation of law, as a matter of fact. You can actually sue the government under Section 7433. We'll talk about it, because the statute says, notwithstanding any other provision of this, an employer shall not be required to deduct. This is the only statute dealing with withholding. And when you claim exempt and you give your employer that sworn affidavit, he is not authorized to deduct taxes from your pay. What the government is doing, however, is having letters sent to employers. These are letters that are not signed. And there is no other provision in the law. And remember this, if you had $100 in your wallet, could the government come around and say, I'm going to take 30? Well, if the government can't take $30 out of your wallet without a court order, how can they take $30 out of your paycheck? In other words, you're given the right to claim exempt. Now, sometimes the head of the payroll department, who may pay taxes herself or himself, when she sees your claim exempt, she says, well, you can't claim exempt, because she's jealous. She doesn't want you. She pays, she wants you to pay. So she might say, Jerry had this experience. You can't claim exempt. Now, I have a W-4 package, which will give you a lot of reasons why you can claim exempt. Well, one of the reasons you say, well, if I couldn't claim exempt, why is it on the document you gave me? Or you can say, well, who do my wages belong to? Me or the government? When she tells you you can't claim exempt, you can say to her, well, do I tell you how do you pay taxes? Paying taxes is between you and the government. You might say, look, you show her Section 34020N and say, look, I've done what the law requires of me, now you do what the law requires of you. If I give you a W-4 claiming exempt, the law says you are not required to deduct. Now, if any IRS agent tells any employer to disregard your W-4, you should ask the IRS agent, what statute supersedes, what statute authorizes you to tell my employer that he's to disregard the provisions of Section 34020N. So with that, everybody can immediately give themselves a pay raise, because you can't be required to pay income taxes for two reasons. One, you're not liable, and the tax hasn't even been assessed. So everybody understand that? Everybody can give themselves an immediate raise. A lot of what we went through was background to enable you to actually avoid all of the problems involved in filing a tax return. When I was paying income taxes way back when, I used to literally hate March and April, because that meant I had to get together all my receipts and prepare some phony ones, as all self-employed people do, get together with my accountant. I actually would get nauseous in March or April. Now, we're going to show you how to file a tax return in under 5 minutes. And I'm going to tell you something. I saw a study was done not too long ago about what people fear most, along with death and divorce and losing a job. IRS audits were right up there. People fear IRS audits. When people get a letter, they see the IRS, sometimes they start to tremble. Why? Very simple. Most small businessmen, at least, people especially have a cash business, even the IRS knows, underreport their income by 40%. Or they inflate their deductions. They lie on their tax returns. And they know they lied on their tax returns. And if they didn't lie, if they paid the government everything the government wanted, they'd be out of business anyway. The only way they can stay in business is to lie on their tax returns. So the government has made liars out of everybody. Except when you lie on your tax return, you've committed perjury. So people send in tax returns knowing they committed perjury, but there's nothing else they can do about it. Now they get a letter from the IRS, and they worry, oh my God, they found out I didn't report that income, those deductions were phony, they're going to go over this, and I'm going to owe more tax, and they're really worried about it. Or they have to get their accountant, and it costs them a lot of money. I'll tell you what the IRS does also, which come to my attention. A man dies. I think they must look at the death certificate, death notices in the paper. Now, 2 years later, after the man died, they contact the widow, and they say, you know, we've just reviewed your tax returns, and we think that you have some unreported income, or you've computed it. Now her husband is dead. She doesn't know anything. All the records are away. Let's assume the IRS agent says, I believe he has at least $1,500 additional taxes due. Now, what does this widow know from this? She calls the accountant up, and the accountant says, look, if I have to come down here and if I have to take out the records, my time alone is going to cost you $1,500. Pay it. And that's what they do. This is legalized extortion, and they know this happens, and they can always, because 2 or 3 have told me this, and I'm sure this is part of their IRS's policy. But you're defenseless. What does she know about this? This is the insidious nature of the income tax. This doesn't happen in connection with gasoline taxes, import duties. This is why we shouldn't even have an income tax, because it imposes all kinds of record-keeping burdens. It's ridiculous. All it does is make money for lawyers, accountants, and tax preparers. Now, our return is totally accurate. You're going to file a tax return that's going to be 100% accurate. You're not going to take any phony deductions, and you're not going to leave out any unreported income. Now, on page 274 of the Federal Mafia, I've showed you how to prepare what I call a zero return. Actually, you report, I only show 0 on wages and 0 on dividends. Actually, you should put zeros all the way down. We've changed it somewhat, and we have, actually, I show 0, 0, 0. For every item of taxable income, I put 0. Every item. Now you turn over the page. Now, if you want to show your withholding allowance or standard deductions, you can if you want. The point is you're going to end up with a 0. Now what you do is you attach on your 1040, you attach your W-2. Sometimes people liquidate pensions. and they withhold taxes, you attach to this document anything that shows that you pay tax. You don't attach 1090s. Just because somebody told you that something was taxable income, you know it's not, because it's only corporate. So you forget 1090s. What you want is proof that you pay taxes. If you pay estimated taxes, you have those little receipts, or you have canceled checks. So now you show all the money you paid. And now you show that's what you want for a refund. And you ask for all that money back. Now, somebody would say to me, well, how can I report zero income? How can I report zero wages? And it's going to show I had $50,000 worth of wages, and you're going to tell me I'm going to report zero wages? Yes. Because strange to say, if you look on line 7, you may think it asks you to report your wages, but it doesn't. See, the government doesn't do anything by chance. You see the outside column here? It says income, doesn't it? The government is asking you to report the wages from income. What does income mean? Corporate profit. So is that asking you to report the wages that you receive? No. It's asking you to report the wages derived from corporate profit. Now, that means like a corporation. You're not a corporation. So you've received nothing derived from it. If you receive, think of the women who pay alimony. And do they get alimony derived from a corporate profit? No. If you have a capital gain, if you sell a house, gambling winnings, is that derived from corporate profit? It's not. So that's why you can sign all the way down 0000. And then you ask for all your money back. Now, that's not the end of it. What we do, and this is the whole key, there is an attachment that we put on the W-4. Now, in the book, when I wrote it, the attachment was only one page. Over the years, we've enlarged the attachment, and it's far more powerful than it is today. Now, the attachment is self-evident. I'm not going to go over every paragraph. Certain paragraph is more important than the other. The first thing, incidentally, you number the front of your return. You number 1 of 4. The second page is 2 of 4. This becomes 3 of 4 and 4 of 4. Now, number 1, you say, I am submitting this as part of my 1996, 98, tax return. Now, you tell the government right off, I know that no law establishes an income tax liability as, for example, that's it. Okay. And no law requires me to pay income taxes. No law requires me to file. Now, this is very important. You say, I am filing anyway because I know the government has prosecuted others for failing to file income tax returns. Therefore, this return is not being filed voluntarily. So even if the information is false, they can't use it against you. Now, for those people who file traditional returns, I tell them, unlike if Leona Hemsley had done this, she never would have been prosecuted. She never would have gone to jail for 3 years. Suppose Leona Hemsley had attached, or Pete Rose, or anybody who listened to their accountant and lawyer and filed a tax return, you should attach to your tax return a statement saying, this return is not being filed voluntarily. I am filing it under fear that if I didn't file it, I could be prosecuted for failing to file. Once you do that, it makes no difference what you put on your return. And if Leona Hemsley had only done that, they couldn't have introduced her tax return, which is why she should have sued her tax lawyers for malpractice. And now, we even tell people, so if you're going to file a traditional return, just do that. Do that alone. And that'll save you from ever being prosecuted for tax evasion. Now, you see, we refer to the Privacy Act notice. And we say, I went to Section 6001, and that section told me that I had to be served with a notice. I never got a notice. But I'm filing anyway. What we're doing here is we're setting up, if the government ever charged you with filing a false return or failing to file or trying anything, you're protected here. Because everything we're saying here is 100% correct. And you're telling them, I never got a notice, but I'm filing anyway. Now, we then cite 4 cases, U.S. versus Long, U.S. versus Kimball, where the Ninth Circuit has ruled that a zero return is a return for tax purposes. Now, that's the Ninth Circuit, which takes in California, Oregon, Washington, Nevada, Arizona. I think. That doesn't mean just because other states haven't said it, it's a precedent. You can rely on these cases. U.S. versus Moore is a Seventh Circuit case. Okay.
Is this
now,
first Long case? Is that Lloyd Long?
No, that's not Lloyd Long. This one, no, that's not Lloyd Long. Paragraph 5 identifies that this is also a claim for refund. Not only is it a tax return, but you're asking. Now, if you didn't pay any taxes and you're not asking for a claim for a refund, you'd have to line out or leave it out. And so I put all of this on a disk. So if you had the disk, you just change it. Now, paragraph 6, we now say why we had zero income. We cited the case of Merchants Loan and Trust Company, which before I said the word income means a corporate profit. So now you're telling the government that I know the meaning of income. Income means a corporate profit. Now, how many people believe me when I said income means a corporate profit? Everybody believe me? Now, if you were to swear, therefore, that you had anything other than zero income after believing income is a corporate profit, what would you be doing? You'd be committing perjury. So you say, obviously, since I know the legal definition of income, if I were to swear to having received any other amount of income, I would be committing perjury under both 18 U.S.C. These are the perjury statutes. Therefore, not wishing to commit perjury under these statutes, I can only swear to having zero income. Isn't that nice? Yeah. The only way you can avoid breaking a law is to swear to having zero income. Once you know that income means a corporate profit, if you swear that it means something other than corporate profit, you're committing perjury. Okay. Now, another thing, paragraph 7. Sometimes the government will tell you that we're going to talk about what can happen to you if you file a zero return. Sometimes they'll call the return frivolous. So what I'm trying to do is cut them off at the pass. It's not frivolous. The word frivolous means silly. No basis in fact. We could be wrong with all what we're saying, but it's not frivolous. It's not silly. Incidentally, remember I told you the importance of regulations? There is no regulation that enforces that particular statute where they can impose a penalty. And no, I have a letter here. No IRS agent, as a matter of fact, is authorized. Here it is. They will try to impose a penalty, but somebody out in New England, here it is, he's in Massachusetts, and he got a letter from the Internal Revenue Service. Let me see what it says. This is in response to your Freedom of Information Act. You have requested the regulation implementing Internal Revenue Code Section 6702. That's the code section which they say gives them the authority to impose a penalty. We have no record of this regulation. So there's no regulation that allows them to impose a penalty. So therefore, if they ever do impose a penalty, among other things, you go, yeah, I'll pay it. Let me see the regulation that requires me to pay this. Fine, and there is no regulation. Okay? So we put that in there. Now, paragraph 8 tells them that you're entitled to a refund because there is no assessment. And Chapter 63 of the Code has to do with assessments. The government is required to assess you, and since the Supreme Court has actually ruled that unless there is an assessment, you don't know it. Now, the next paragraph is a new addition to this attachment. This is something new, which may shock a lot of people. Now, in the book, The Federal Mafia, I discovered that the withholding tax was not an income tax. Everybody thinks that taxes coming out of their pay each week are income taxes, but they're not. They're a separate tax. They're a separate tax. Let me show you where I explain this in the Federal Mafia. On page 159, I wrote in this book, and now for the big surprise, withholding taxes are not even income taxes. Let me read section 3402 is the section of the code that deals with the withholding tax. Now it's entitled Income Tax Collected at the Source. But let me read what it says. Except as otherwise provided in this section, every employer making payment of wages shall deduct and withhold from such wages a tax. This is a new tax. And then in section 6413 it says, if more than the correct amount of tax imposed by section 3402 is paid, then you can get it as a credit against the tax otherwise due and payable. In other words, section 6413 clearly states that withholding taxes are imposed in section 3402, but income taxes are imposed in section 1. Well, here's what happened. As I figured it out. In 1943, the government had to start collecting during the Second World War. Up until then, if you owed income taxes in 1938, you paid it in 1939. You computed your tax for the year. In the following year, you paid the tax in one lump sum or three installments. And only the very wealthy paid the tax. However, starting the Second World War, they increased the rate of tax and they lowered the amount where you have to pay it. And now a lot of people during the war, like Rosie the Riveter, people working in the shipyards, how are they going to get taxes from Rosie the Riveter? Is she going to have the money next year to pay her tax this year? They had to start this pay-as-you-go, withholding taxes. But how can they withhold taxes that have never been assessed, which cannot be assessed until next year? How could they legally do it? So what they did is this. They passed a tax on wages, which is totally unconstitutional. It's a wage tax. And they wrote the law, said you can take it as a credit against the tax otherwise due the following year. Now, it looks like what's coming out of your pay is income tax, because suppose you had $10,000 coming out of your pay and you owe $15,000, and you think, well, I'm deducting it from the $15,000 I owe. No, the way that statute is actually worded is that you actually owe $15 in income tax, and they're giving you a credit for the 10. Now, this is strictly unconstitutional and illegal. It was a direct wage tax, and the Constitution would have to be amended, or they'd have to apportion it. But nobody knew it. Nobody knew that what was coming out of your pay was a wage tax. Now, I knew about it, but I didn't do much with it until about, 2 weeks ago or 3 weeks ago, maybe 3 weeks ago. Somebody called me, and he said, hey, what does Section 31A1 mean? And he read it. He didn't know what it meant. While I think I know a lot about income tax, I can't claim to read every section in this code, and frankly, I had never read the section. So but the minute he read a portion, I know what it meant. Now, let me read what it says. Section 31A1. Okay, here's what it says. 31A1. Section 31. Okay, tax withheld on wages. Wage withholding for income tax purposes. Okay? The amount withheld as a tax under Chapter 24, that's a different tax, shall be allowed to the recipient of the income as a credit against the tax imposed in this subtitle. That means Section 31 allows you to take a credit of the taxes withheld against the taxes due. So there are two reasons we're entitled to a refund. Number one, they've never been assessed. And secondly, when you file a zero return, you show zero income, and you're entitled under Section 31 and 1462 to get a credit of the amount of taxes withheld. How about those apples? Yes. So if they try to claim that we could assess you later, I want it as a credit. The law says you can take a credit for the withholding taxes against the tax otherwise due. So there's two reasons that we can get our money back. One, we have a right to take it as a credit against the tax due, which was zero, and it hasn't been assessed. So now we got them in a double whammy. You like that?
Yeah.
Nobody. Now you're one of the few people in the country that know that. As a matter of fact, that'll be on my next shift report. Now this is why people say to me, Rowan, I have. When I do a seminar, I have what I call shift report series 1, 2, 3. I have to continually supplement what I put out. And that's because I may know something today and find out something tomorrow. There's no way at any given moment I say this is what it is. I've changed this attachment that we use about 5 different times, always improving it. Okay. Now, sometimes the government tells you, we can change your return. So we say in paragraph 10, you can't change my return because there is no statute. Paragraph 11, most people fear audits. They don't want to. We're saying if you don't agree with this, I demand an audit. I want a field audit. Should the service disagree with the figures and amounts shown on my tax return, I demand an office or a field audit to discuss these differences as required by the Administrative Procedures Act, required by Treasury Regulation 601-105. We're saying if you disagree with my zero income, then I want to come up, I want to be audited. Now, I don't worry about an audit because there's nothing to disallow. We're going to get to audits in a moment. But what am I worried about? I know I have no income, and that's what I showed. I know they can't go over my deductions. There's nothing to disallow. That's why they don't want me up there. I got a demand to be audited. In addition, you say, I will hold IRS employees who disregard the statutes and court decisions accountable. Now, in addition, on the bottom, you see note 1 here. In addition to the case of Merchants Loan and Trust Company versus Schmitanka, I now cite an additional 10 Supreme Court cases where the Supreme Court has ruled the word income means a corporate profit. So when I submit my tax return, I cite no less than 15 court decisions to support my return, plus regulations, plus Privacy Act. Now, when you filed a tax return last year, did you cite any court decisions to support your return? So I cite court decisions to support my return. So that's now, if the government doesn't give you a refund, you have a right to sue the government, and we have provided people with lawsuits, and right now I have about a dozen lawsuits pending in district courts suing to get the money back for people. Now, a lot of people, of course, have gotten their money back, and oops.
Are they doing that in the pro se form?
Well, here I can just show you checks. Oh, and here are all kinds of checks. As a matter of fact, there was a news article, the New York Times article. Yeah, we want to put the New York Times article in. And in the New York Times article, they mentioned a fellow by the name of Tim Deaton. The New York Times interviewed him, and he explained how by filing my return, he got back $28,000 from the government. And that's in the article that appeared in the New York Times. A fellow recently filed a zero return, an amended return, and he got back from the government about $43,000. I have the check here. Here's one check for $25,000. Oh, that's Tim Deaton's check for $25,923. He was prepared to file a return and pay him an additional $10,000. Instead, he filed a zero return and got back $25,000. We want to give you the check of somebody who got back about $43,000. So we have a lot of these checks. Now, I can't guarantee that everybody who files a zero return is going to get back a check. There are 4 things that they may tell you. They may tell you it's frivolous, and I'm going to tell you they have no authority to do that. They may say, we've changed your return. They have no authority to change your return. We ask for an audit, and we'll tell you how we handle that. Or you might get a refund. Now, by filing a zero return, it's going to help you in many cases with your state income tax. I have found in many cases that state taxing authorities are more arbitrary and oppressive than the federal government. Now, the states, frankly, have more taxing authority than the federal government because the federal government is bound by the apportionment provisions of the Constitution, which the states don't have to contend with. The states could tax wages. They could tax dividends directly. Federal government can't. It has to apportion the tax, which is a very difficult thing for the federal government to do. This is why we don't want a national convention, a constitutional convention, because the first thing they'd write out of the Constitution are the apportionment provisions, which ties the government's hands in imposing direct taxes. But the states, if they wanted to, could tax wages, they could tax dividends, but they don't. What they do is they piggyback their state income tax on the federal. And all of the states, if you look in their tax laws, say income means the same thing under state law as it means under federal law. Now, if you prepare a zero tax return, when you, let's say the state of California, when you go to do your return, it says that either the first or second question on your California return, they say, enter here the amount shown on your federal return under adjusted gross. Now, you filed a zero. Under adjusted gross, you got a zero. What else are you going to put on your California return? You can't lie. So now you put a zero, you start off with a zero on your California return, but you put a little asterisk. You say, see my federal return attached. Now you attach your federal return to your California, and I can show you a lot of checks that we got from various states where people have gotten back from Massachusetts, from Arizona, from California. They get back their state taxes. Again, that's not true in every case. Sometimes they'll try to say it's frivolous. The funny thing is when California tries to accuse you of filing a frivolous return, we have a letter for that. You go down and you say, well, how can it be frivolous? What else can I have put there? You see, the California return and all your state returns don't rest on their own 2 feet. They say, put here what you put on this return. Well, if you put a zero on that return, what else can you put on this return? So, the zero, you attach, yes, you attach your entire federal return. Your federal return consists of 4 pages. If you're going to file your state return, you take your state return and you say zero right there, and you fill out the rest, ask for your money back if you overpaid. and say, see it, my attached federal return. And if they call you from the state, you say, well, that's what I had to put there. If I put anything else there, I would have committed perjury. And then if they say, well, you had income, if you go to your state statute, you'll find that income is not defined in their state law. So then if you say, well, if they say it means the same thing as it means under federal law, give them the federal law and say, show me where income is defined under federal law. And of course, they have to go to Section 61, which we went over. And Section 61 doesn't say wages. It says income from, and then you understand. If you ever have a hearing for state tax, you go with the case United States versus Ballard, which says income is not defined on federal law. You go with the Schmitanka case, which says income is a corporate profit, and your knowledge of Section 61, where you know the difference between sources of income and income itself. So that takes care of the zero return. Anybody have any questions on that?
Only one thing. Suppose you have like dividends.
Okay, the question is, suppose you have dividends, but there's nothing in the law that says dividends are taxable. Okay, let's look at it this way. Sure. Does a corporation pay tax on its dividends? No, only if it has a profit. It can have millions of dollars worth of dividends, but if it doesn't have a profit, does it pay tax on its dividends? No. You don't have a profit, so you don't have, your gambling winnings aren't taxable. If you sell a house, if you have capital gains, none of that is taxable because you're not a corporation. And the only thing that's taxable is profit. Incidentally, since individuals are not allowed, by the way the IRS looks at things, individuals are not allowed to deduct their rent, right? Let's take a person who goes to and from work. I mean, they need the car. It's absolutely, the government says, no, you can't deduct your car. It's a business expense. It's a personal expense. You know that. You can't deduct your car. Only if you're a salesman, if you don't go directly to and from. But if somebody is a salesperson, if somebody is an administrative person, works in an office, and takes the streetcar to and from work. I knew a woman who worked in New York City, Manhattan. She lived out in Queens. She took an express bus into work every day. It was $3.50 one way, $7 a day, $35 a week. She couldn't deduct it. Now that shouldn't surprise anybody, but you can't deduct it. Now let's say she was making $400 a week and paying taxes on $400. She's actually only making about $365 a week. Now, since the code presumably doesn't allow you to deduct, individuals can't deduct these expenses, but corporations do. Is the code unfair? Is the code unfair? Huh? No, the code isn't unfair because there's nothing that says you got to pay income tax on your wages to begin with. I tricked you. The code is not unfair.
You work for the IRS.
Yes. You see, the code is not unfair because there was nothing that said you had to report your wages as income to begin with. The next thing we'll cover is how to deal with IRS agents. Now, as I said, typically a person goes up to an IRS office who files a traditional return. Chances are it was a false return. Chances are he underreported his income, he overstated his deductions, and he's fearful of the IRS. He doesn't know anything. And as the documentary on 60 Minutes pointed out, the IRS agent admitted that they deliberately lie and mislead the public. And the public believes anything an IRS agent tells them. Now, the IRS agents, when you file a zero return, they don't want us up there. They write us, we've changed your return. Now, to show you how nonsense this is, if you sent in a return in which you reported $20,000 worth of income and $10,000 worth of deductions, and they knew that you had $1 million worth of income or $100,000, they wouldn't write you a letter say, we've changed your return. They said, come on in here, we want an audit. Why didn't you report this? They would go over your return, but they don't want us in their office because there's nothing to audit. So they try and impute income to us without auditing us. They don't want us in their office. We have to fight to get there. But you have a right to have when you file a tax return, a zero return, and you put a zero on your return, that's as much a number as 100,000. Zero conveys information. Now, when you file a zero return and the IRS disagrees with it, they have to send you what we call a deficiency assessment. You have a right to have your return audited. If an IRS agent suggests that you owe more money than you put on your return, then you have a right to discuss it, to debate it. Now, the IRS puts out a document called your rights as a taxpayer. When they normally send you a letter telling you about audit, And this rights of a taxpayer shows you the procedures that they have to go through before they actually seize your property. Now, one of the things it says that if you have a disagreement with the findings, correspondence starts here, choice of act, request for appeals conference. As a matter of fact, there's a document here. It's called Publication 5. If you decide not to agree with the examiner's findings, you have an option of requesting a meeting with the examiner's supervisor to discuss the findings. Now, you have a right to have your tax return discussed, and you have a right to challenge the government. There's such a thing as the Administrative Procedures Act, to which all government agencies must conform. Now, technically, we're supposed to be a country where we have a Bill of Rights, where the government is supposed to be our servant, not our master. Actually, it's now the other way around. And only Congress is supposed to make laws, and we're only supposed to conform to laws passed by Congress, not dictates of administrators. Now, starting with the New Deal especially, the government created a lot of new agencies like the Labor Department, other departments, and they can claim you broke the law and impose fines. Now, no court imposed a fine. Now, think about it for a moment. Before the government can actually say impose a fine, you actually should have a court hearing. But they have a lot of these agencies that will impose fine. Let's talk about that $500 frivolous fine. But if our government could impose a fine on you without a hearing and then proceed to seize your property in payment of that fine, then this is a fascist dictatorship, pure and simple. The difference between living here and presumably under Attila the Hunter in a fascist dictatorship is that you have rights. The government can't take your property if they want. They have to give you a hearing, okay? Now, we have the Administrative Procedures Act, which says, it's in subtitle, it's in Title 5. It says that a sanction, I mean a penalty, may not be imposed or a rule of law or order except on a consideration of the whole record, and a party is entitled to present his case or defense by oral or documentary evidence, to submit rebuttal evidence, and to conduct cross-examination as may be required for full and true disclosure of the facts. Obviously, if any government agency wants to say that you owe this, that, and the other thing, okay, I want a hearing before that government agency. And who says I owe this, that, and the other thing? Now, what the government tries to do with us, they try to get around this. They try to send us letters saying this is what you owe, and if you don't want to owe it, go to tax court. However, they're supposed to audit us. Our whole trick is we want to be audited. Now, when we go up there, I have a document. And I'm going to show you how our audit takes place. We have a document here in which contains the front page of a Supreme Court case called Federal Crop Insurance Corporation versus Merrill. What the Supreme Court said in this case, and I'm going to read from the case, anyone entering into any arrangement with the government takes the risk that he who purports to act for the government stays within the bounds of his authority, even though the agent himself may be unaware of the limitations upon his authority. What this case said, basically, if you listen to what an IRS agent tells you, he may not even have the authority to tell you that, and you're taking the risk. Now, most people go to IRS offices and they tell me you owe $50,000, $20,000, you know, okay, just what I owe. But how do you know you owe it? Number one. Now, the other document we have, when you go up, incidentally, this is included in our audit packet with a lot of other documents, because the whole thing in this approach is to zero return and know how to conduct yourself in that first audit. If you do that audit right, you blow them away, you have no more to worry about from the IRS. So how do you blow them away at that audit? Well, you see this document here. I have 3 statutes in this document. Section 6201, which we covered, that's the assessment section, and 2 other documents, 2 other code sections we talked about a little while ago, Section 6011 and Section 6001. Now, what do you remember from Section 6011 and 6001, which was important? You have to comply with regulations. Is that right? Did Congress ever pass a law saying you got to comply with what an IRS agent tells you? Did Congress ever pass a law that you have to comply with letters from the IRS? The only thing you have to comply with are regulations. Is that right? Okay. Now let's go back to Section 6201. Section 62 says, the Secretary shall assess all taxes determined by the taxpayer as to which returns or lists are made. Which means when you send in a tax return, you've determined what your tax is. You've made a return, and when you determine it, it's zero, it's zero. There is no other statute that allows the government to estimate an amount of tax over and above that you put on your return. There is no statute. Okay? Now, following in Section 6201, there's a provision for unpaid taxes payable by stamp. Now, there are two general kinds of taxes the government collects. Taxes payable by stamp, and those are when you buy a bottle of wine or alcohol, you'll see a stamp. Now, alcohol manufacturers or tobacco manufacturers will buy these stamps, then add them to the package, and then increase the price of the package by that amount. That's how you pay your tobacco taxes and liquor taxes. Now, let's assume somebody has a still making moonshine, right? He's not paying his liquor tax. Now they discover this still, and they find out that this guy has been selling about 1,000 quarts of liquor a month for the last 10 months. And he should have been paying, we'll say, $1 a quart, and he's been selling 10. Okay. What Section 6201, paragraph 2 says, unpaid taxes payable by stamp. And it says, when taxes have been omitted to be paid by stamp, it says, the Secretary, upon such information as he can obtain, is authorized to estimate the amount of tax which has been omitted to be paid by stamp. There is nothing in Section 6201 that says that they have a right to estimate the amount of taxes which you have omitted from your return, and there is no other statute that gives them the right to estimate the amount of taxes that you omitted to be paid. That's it. Okay, now here's the way we conduct our big audit. We go up there with these documents and a few other documents in my audit packet. We let him ask a few questions. He may add, would you bring your documents you bring here? He may ask your name, and you answer the questions. And then we suggest that you pretend not to know too much. We want to lull him into a false sense of security. And you have your code with you, and you have this in your briefcase. They can't see it. Also, you tell them you're going to tape record this. And as long as you tell them, you have a right to tape record, and as long as you tell them 10 days before, if you go up with your tape recorder, and if you don't tell them, they'll say, we'll terminate the interview. They want to tape. Okay, so now I got my tape recorder there. I got my code book here. And what I do is I have a big tab next to Section 6201. It always pays to go up. You can use this document if you want, but the code book... The code book is more intimidating. I've actually had people tell me that they started to shake when they see the law in front of them, because they know they lie, and I got the law. Okay, so what you do is you have the tab. And I see you have the tab next to Section 6201. Okay, now what I do is we have this tabbed. Let me just take this tab. Well, I don't have a tab. Let me have a tab. Let me have a card. Okay. I should have had a tab here. 6201. Okay. Now I wait. I let the IRS agent ask me a few questions. Then I say, now, let me understand. What are you trying to estimate the amount of taxes that I omitted to be paid for my return? And I don't care what he says. He may say, well, I'm not estimating anything. You send in your W-4s and it showed this time. I said, yeah, but basically what you're trying to do is estimate the amount of taxes that I omitted from my return. Is that what you're doing? And finally he says yes to that. The minute he says yes to that, I take out my code and I turn to Section 6201. And you highlight that in yellow, and you read it for him. It says, with taxes payable by stamp, it says, Secretary is authorized to estimate the amount of tax which has been omitted to be paid by stamp. Now you show me, you just said you estimated the amount of taxes I omitted from my return. You show me the code section that authorized you to do that. As a matter of fact, I even got my checkbook here. Bring up your checkbook, open it up. If you can show me the statute that authorized you to do it, I'll write you out a check right now. Well, what's he going to... There's no section that authorizes him to do it. He can't do it. Now, on top of it all, if he says, well, I don't have to show you anything, or what, now you have this, he may do that. And again, a lot of this is covered in my audit, which is I have a 2-hour tape in the audit packet. But now you have with you also Section 6011 and 6001. It says, when required by regulations. Now, regardless of what the agent tells you, you say, look, is there a statute that says I have to do what you tell me? If you have, let me see it. The law says I got to comply with regulations, and I want to comply with those regulations. So you show me a regulation that authorizes you to estimate the amount of taxes I omitted from my return, and a regulation that says I got to do what you tell me, and I got my checkbook right here, and I'll write out a check. You can't do either. So basically we got them, because what you're going to do is you're going to have a tape you're going to make a tape of that, and you're going to make a transcript of the tape and send it to the district director. Because what we're doing here, Section 7433 of the Internal Revenue Code, which is a relatively new section, says that if any IRS agent violates any law in connection with this, you can sue the government for up to $1 million in damages. Section 7433 of the Internal Revenue Code. Incidentally, when an IRS agent tells you that you have to pay a tax or that he's going to seize your property, what we do is we say, oh, in other words, what am I liable for? Well, we're going to get to this when I get to liens and levy. The point is, if he tries to estimate a tax, after you offered to pay it, you had your checkbook. You went up to the audit with your checkbook. And if he says you owe more money than you reported, I'm willing to pay you right now on the spot. Just show me the statute and the regulation that requires me to pay it. And he can't produce it. And you'll have proof of that on the tape.
What recourse do you have when an employer refuses to honor your statement and start to turn property over to the IRS on a fraudulent levy?
Okay, you can sue him in state court for breach of contract. And you don't sue him in federal court, you sue him in state court. Because if you claimed exempt, the statute gives you a perfect right to claim exempt. Now, if he turns your money over to a third party, forget it's the federal government, it's a third party without a court order, with your permission. How can your employer give your money to a third party without your permission or a court order? Mm-hmm. Now, remember, as we discussed, when your employer gets a notice of levy, what you have to do is give your employer a sworn affidavit that the IRS agent had no delegation of authority to send a notice of levy. Now, it's up to him to check with that IRS agent and to see if he had the delegation of authority, which he's not going to have. Mm-hmm. And therefore, in any lawsuit, he has the burden of proof showing that he turned over your money to somebody authorized to get it. And the IRS agent will not be able to produce any such authority.
Well, what I've found out is that a lot of times the fact that you're employed may be in jeopardy because just bringing up the simple fact of arguing the point. And so, I'm wondering what type of remedy there is outside of going to the federal courts.
Well, you could, and there's possibility. I've heard of people, because they claimed exempt, they were terminated. And you can bring an action against your employer under the labor laws for false termination of employment. However, the last time I wanted to do that for somebody, when he called me, he got a job a couple of days later, so there was really no loss. Now, sometimes people say, well, if I do this, I'm going to get terminated. I'm going to get fired. They have to pay taxes. Well, then you got to realize you're making a lot less money than you're actually earning. You're paying extortion for the privilege of working there. You either got to get another job or assert yourself. I think if you assert yourself correctly, if you bring the law to your employer, especially, you say, look, I know Jerry had this problem. Jerry worked in the hospital, right, Jerry? What was your experience?
Well, I brought the law to my employer and let him know about the W-4. And once he had looked it over and understand what it was, then he had no problem with it. Matter of fact, I got kind of bold, and when it came up to reapply the W-4 for the following year, I said, well, I'm not turning any W-4s, and he begged for one.
But the point is, Jerry's experience was initially, Jerry, they didn't want to honor your W-4, and he worked in a hospital. He went all the way up to the controller with the Internal Revenue Code, and eventually they honored it.
Yeah, they not only did they honor it, they asked for it again. By the next year, it was legit, and they realized that it was a legal document and everything was okay. I guess they checked it out with the IRS or whoever it was, and they demanded to have it then.
So the point is, I don't want to interrupt, but the point is you can do it. And I've heard many people tell me where they initially didn't want to honor it. I know in Las Vegas where more and more casinos are honoring W-4s, whole businesses are honoring W-4, especially where the owner of the business understands it. Because you have a right to do it. And of course the IRS has no authority to contact the employer and tell him to disregard your W-4. Now again, I have a W-4 packet which gives you a lot more information. There's even a court case where a court has ruled that if you claim exempt on your W-4, the employer has to honor it.
When you file the 00 return and you do get some of the repercussions that the IRS, some of the objections you said could come back, and then you supply them with the appropriate documentation.
Yes.
How long, I mean, is this going to make your life chaos for 3 years, or if you just, is it going to, if you give them the right documentation, how long does it usually take the process?
Well, first of all, it's not chaos. First of all, it saves you the trouble of having to keep books and records, and that to me was a lot of problems. Secondly, you have more money to spend, so you can take trips. I mean, it makes life much easier. The only thing that's going to happen is if they say it's frivolous, we have a 6-page response, and that usually you never hear from them again. If they say we've changed your return, you get a 30-day letter. You say, I want a hearing, and you go down there and you just do exactly what I say. You offer to pay it, show me the regulation. They can't do it.
And you can resolve it probably within that tax year.
Well, yes, I mean, it's no big deal. Now, they may send you a deficiency notice then, trying to kick you to tax court, which is a phony court altogether, and we have letters that eliminate the deficiency notice. Because when you get we discussed that a deficiency notice is sent by the IRS if you can't resolve your problem and when you go to tax court. But tax court isn't a court, it's just another government agency. And there are no regulations that say you have to pay a deficiency computed by tax court. Once you understand that you're only told to comply with regulations, in any confrontation with the IRS, you simply, I got my checkbook, right out, show me the regulation. I mean, it's no problem. And you have to understand that when you go up to see an IRS agent, you know more than that IRS agent. And pretty soon he'll understand that you know more than he does. And like anything else, you're going to watch this video, you're going to get the tape, you're going to read it, and as we have tapes and you listen to the tapes, and little by little you get more and more familiar with the material, and it becomes simple. The people who get I get a lot of calls from people who are in trouble with the IRS. Talking about people who are in trouble. It's people who file traditional returns. They file a traditional return. Many people file a return, they don't have the money to pay the tax. And so they file it anyway. Now the IRS comes and they want the money, they don't have the money, they try to seize their property. Or somebody files a tax return and the IRS wants to audit you and you got to go up with your books and records. And then they disallow your deductions and then you got to hassle with them. I mean, that's a hassle. I mean, it's so great not to have to keep books and records and not to have to worry about these things. I mean, you're really free once you get rid of the income tax.
I've read about things like this that people say to throw away your Social Security card. Is that part of this?
No. I'm glad you raised that because there's all kinds of misleading information that circulates, sometimes called the patriotic community or the tax, and that's one of them. No. Whether you owe a tax, remember, has nothing to do with your Social Security. It has to do with the fact that there is no law requiring you to pay the tax. There's no liability, you have no income, and you never got notified you had to pay it. Now, there's a lot of misinformation that circulates. There's some people say, well, you've accepted a benefit from the government, therefore you're required to pay the tax. Or there are people talking about 2 and 3 different United States, or as I said, you've accepted a benefit, or you're sovereign and you're raising these issues, or wages are not taxable because they're not a taxable. But there's all kinds of misinformation that circulates. And one of them is give up your Social Security. The pathetic part about that is if you really could, and I don't even think you can, Social Security taxes would still come out of your pay. Except there's certain benefits you get by having Social Security. Even though you're overpaying for the benefits, if you got disabled, you can get a pension. If you're married and you die, your family has certain death benefits. So the fact is you do get certain benefits out of Social Security. So I even know of a situation where some woman claimed she was a nurse. For some reason, she claimed she could do that. She gave up her Social Security, and when she told that to the hospital, they fired her. Now, this is the kind of misinformation that circulates. You don't have to give up your Social Security. I don't even think you can, even if you wanted to. But that's a very good question.
I'm in business. What about paying the taxes for being self-employed.
I mean, Social Security taxes?
Yeah, Social
Well,
Security.
frankly, this frankly has a much more value to people who are self-employed, I'll tell you. If people follow these procedures, they'll stop the withholding of income taxes, but they'll still have to pay Social Security taxes, which in many cases is substantial. But if you're self-employed, you have what he calls self-employment tax, which is 15% of your adjusted gross. But if you have no income, if you file a zero return, you're going to save self-employment taxes. So you're going to save 15% self-employment taxes plus the income tax. Plus, if you're self-employed, you're not going to have to spend time keeping books and records and collecting all of those receipts, which in many cases can take up 10 and 15 hours a week. So now you'll have far more time to devote to productive purposes rather than just being a pack rat for Uncle Sam.
So you do have to pay the Social Security tax.
Well, the thing is, if you work for wages, when you claim exempt on a W-4, that just stops the withholding of the income tax. It doesn't stop the withholding of Social Security. There might be a way of getting out of Social Security. I wrote a book called The Social Security Swindle, How to Drop Out, but it's not easy to do. For now, we're talking about all we're going to do is get you out of the income tax. But if you work for wages, you're still going to have to probably pay Social Security. But if you're self-employed, we'll get you out of the Social Security taxes also.
I have a question for you. I really don't know anything about the law, so do you really think I can get away with it?
I like that. Do you really think I can get away with it? You're not getting away with anything. You're preventing the government from getting away with it, from getting away with extorting taxes from you. Now, I know a lot of this sounds technical and complicated. It's only because you've heard it for the first time. I guarantee that if you watch this tape 2 or 3 times and read the book, and little by little, you'll understand it, and it'll be much easier, much simpler not to pay income taxes using the methods that we have than paying tax and exposing yourself to IRS audits and IRS intimidations. So I think that once you learn this, I know it's new. It's like anything else. If you went to school, you heard a lecture, it's only when you read your notes and over a few times and everything starts to clear up. So I wouldn't expect you to think, but this is really simple. It's much simpler doing this than keeping books and records and filing a tax return and having to go up to the IRS with your books and records and putting yourself in their power. And I'll tell you what, you're going to feel like a free American. You're going to really see what it is to be free. You're going to find not only do you have more money to spend, but you're going to feel freer. You're going to feel more like an American is supposed to feel. Remember, our founding fathers conceived of the federal government as our servant, not our master. When you pay income taxes, they are your master and you are the servant. Does the master go with his books and records to the servant and say, sir, are my books and records to your liking? Can you imagine Daniel Boone or Patrick Henry or the Adamses or Thomas Jefferson going to a government bureaucrat and say, is my books and records okay? Meet with your approval? I think, as a matter of fact, if you saw the ghosts of Thomas Jefferson and Ben Franklin walking around and seeing the IRS like the public, the American public, like little lemmings running to IRS offices with their books and records, they would say, gee, why do we bother to write a Constitution? Don't these people know what's in it? So you got to start living like an American.
Well, it sounds all well and good, but if everybody quit paying taxes, who's going to pay for the roads and the police, the fire department, and all the other things that the government gives us?
Kyle, first, that's a good question. Let me tell you something. Roads are paid by gasoline taxes, tolls, highway fees, license fees. That's where the roads get built from. Also, the fire department and all of these civic services get paid primarily by property taxes. So we had roads and we had highways and we had hospitals before the income tax actually went into effect. But you see, what you're saying is, suppose everybody pays tax. Stop doing this. Now, if a very wealthy man went to a tax lawyer, and that tax lawyer was liable to arrange his affairs using offshore trusts and using tax shelters, and he reduced his taxes to zero, this wealthy man doesn't say, gee, suppose everybody does it. He just does it. A former judge, learned hand, said nobody has a patriotic duty to pay more taxes than required by law, and the law doesn't require you to pay. The fact of the matter is, I do what tax lawyers do, but I'm much better and much cheaper. Person goes to a tax lawyer, Kyle, and what does that tax lawyer try to do? Reduce his taxes to the lowest possible number possible. And if the tax lawyer can reduce it to zero, he does it. Except it will cost the individual a heck of a lot of money. And here it only costs a couple of $100. and you don't pay income taxes. But look, if a person wants to pay his fair share, I have no objections to somebody writing out a check and sending it to the government. But don't send them a return, because all the information on there can be used against you. So if you want to pay income taxes because you think that's the thing to do, Kyle,
Not me.
okay.
But is it really the patriotic thing to do?
Absolutely, because we want to take back America. Because the former Chief Justice, as I pointed out, said the power to tax is the power to destroy. And the federal government has been destroying America's economic strength with excessive taxation, destroying American businesses. Do you think if Thomas Edison had to contend with the IRS, he'd ever had time to invent an electric light? Think of Henry Ford when he was working on his car with the Wright brothers. If they had to keep every receipt and worry about the IRS auditing their books and records, we wouldn't have airplanes, we wouldn't have telephones, we wouldn't have anything. We'd be back in the 19th century. And of course, it's the bureaucrats. They're not interested in the national welfare. They're only interested in getting reelected. And what we have to do is take back America. So remember, I pointed out that Thomas Jefferson said, let us bind up government in the chains of the Constitution. Now, who's binding them up? We got to bind up government by cutting off the flow of funds to Washington, because most of what they spend money on are unconstitutional anyway. Remember, when I went into the Army, I took an oath to protect the Constitution, defend the Constitution from enemies, domestic and foreign. And it's our federal government. You've got to conceive of the federal government almost like a foreign power. 30, 40 years ago, we had 200 shoe factories in Brockton and Lynn, Mass. We don't have them there. Will someone bomb them out? Who bombed them out? It's the U.S. government that destroyed those shoe factories. What happened to all the steel factories in Pittsburgh? What happened to all the glass factories in Toledo that are not there anymore?
The EPA, man, they had to step in.
It's the government that what happened to our railroads? The government destroyed it. So remember this. Organized crime in America begins with the federal government, and we want to start to live a life the way the Founding Fathers conceived it. Government's supposed to be our servants, not our master. But today, government is our master. When you just work for government, you turn over 50% of your productivity.
It just seems like there's too many lost souls in the sea of life, in a state of cognitive dissonance and going nowhere because they're all sheeple.
Well, that's right. This is no longer a land of the free and the home of the brave. We're the land of the indentured and the home of the meek. And we want to get it to be the land of the free and the home of the brave. Okay.
Isn't it true that if people don't pay taxes, everybody else pays more taxes because of that?
Well, you know what I love? You know what I love? When I'm on a talk show, I get to have. See, a guy will hear me, and he's angry because he pays taxes and I don't pay taxes. So what he tries to do is hang a guilt trip on me. They'll say, look, if you don't like it here, you ought to be glad to pay taxes because we won't get this. Now, when a man says that, I know he computes his own tax return. Anybody who goes to an accountant would never ask that question because he's always trying to pay as little as possible. So usually when I get that question, I'll say, sir, well, who does your tax returns? You go to an accountant? He'll say, no, I do them myself. I said, oh, well, suppose you go to an accountant and he says, you know, you haven't been taking advantage of Provision B over here. If you took advantage of Provision B, you can cut your taxes in half. Would you take advantage of Provision B? What does he say?
Of
Well, yeah.
course.
In other words, so if you can cut your taxes in half legally, you do it. And then I said, and then the accountant says, oh my God, we forgot about Provision A. If we took advantage of Provision A, we can eliminate your taxes entirely. What would you tell the accountant? You want to take advantage of Provision A? And I just pause, and he doesn't know what to say, because the audience knows the answer is yes. I want to pay. So then he'll say, well, if it's legal, I said, well, what I'm telling you is legal. So you pay taxes because you think you're required to pay, not because of any noble, I had to pay taxes. You believe legally you have to pay it, so you pay it, but you normally try to pay as little as possible.
Legally, you don't have to pay.
But if you don't have to pay, but if you want to pay, pay. Now I say my function here is to educate the American public that it's voluntary. But if you want to pay, go ahead and pay. I have no qualms with that. But I don't think the government should extort income taxes from all of these people. I mean, especially we've heard so much now of the rule of law. But as of right now, do you all think here anybody going to pay income taxes anyway? How many people are going to stop paying income taxes?
Oh, I'd have to.
I'm going to give it a try.
Okay, very good. You'll have more money to spend, and you'll be doing the patriotic thing to do.
All right.
Okay, now, as I mentioned earlier, the Reader's Digest in the March 1997 issue pointed out that the IRS seized 3 million paychecks. The IRS seizes houses. They seize bank accounts. Now, obviously, as you already know, that all such seizures are illegal. Since there is no law making anybody liable for tax, no law requiring anybody to pay, how can the government legally seize property? Especially since the due process clause of the Constitution says you can't take anybody's property except pursuant to due process of law, which means a hearing. Now, actually, when the IRS seizes property, they seize property in violation of both federal law and state law. In Title 28, which is called the Code of Civil Procedure, in Title 28, starting at Section 3001, you have what is called the Federal Debt Collection Procedures Act. And in that act, it simply says only U.S. Marshals can seize property, and they need court orders, and they need writs of attachment. And when the IRS seizes property, they seize property in violation of the garnishment laws of every state. Now, let me explain. The fact that you have private property, and laws were designed to protect property. If it wasn't for property, I don't know whether we'd have laws. Now, laws are designed to protect your property. That's the whole purpose of law. Going back to the cavemen, when the biggest, the strongest caveman can go and take your bone or your this. So laws had to be enacted to protect your property, so somebody just can't come and take it from you. However, some people should be legally entitled to your property. They might have injured you, breach a contract. So every state has what we call garnishment laws. It explains how some third party can get to your property. Now, in all of the states that have garnishment laws, they say before any third party, and it doesn't say with the exception of the United States government, before any third party can take your property, they A, have to take you to court, they have to have a court order, and then the court has to issue what is known as a writ of attachment or a writ of garnishment. A writ of garnishment is when they go to a third party who may owe you money, like a bank or an employer. A writ of attachment is when they want to take your car, they want to attach something that you already have, your house. Now, the IRS never has a court order, and they have no writs of garnishment, no writs of attachment. As I explained earlier, all IRS seizures are illegal. Now, all IRS seizures, of course, start off from Section 6331 of the Code, which is shown on page 99. And it starts off, if any person liable to pay any tax neglects or refuses to pay within 10 days after notice and demand. Now, you already know that since you can't be liable for the tax, Section 6331 can't even apply to income tax. And since I pointed out there is no regulation that allows them to send out a notice and demand, Section 6331 can't even apply. It can only apply to certain taxes for which you're liable. But let's assume it could apply. The first time I saw a notice of levy is when a bank in Hamden, Connecticut got a notice of levy, and they turned over $10,000 to the federal government. Up until that time, I didn't even realize that they could do this. I thought that before they would take my property, they had to have a court order. As a matter of fact, going back years ago when I stopped paying income taxes, people would say to me, well, do you have any money overseas or offshore? And I'd say no. Well, because I didn't think the government can seize your property. I figured I'd have to have a hearing, and at that hearing I'd point out I'm not liable, there's no law. But the first time my bank got a notice of levy and they sent my money to the government, I was floored. And I called some lawyers, friends of mine. I said, how can they seize property without a court order? And they said, well, the IRS can do it for taxes. I said, well, the due process clause of the Constitution says, well, you can't be deprived of property except for taxes. They said, well, but they can do it. They wouldn't give me any reason for it. Well, so when I got the notice of levy, which is a document that is shown on page 107 of the Federal Mafia, I read the first paragraph. I did something that most people don't do, since I had an Internal Revenue Code. And when I read it, I said, well, I knew it didn't apply to me right off the bat because it could only apply to people for which you're liable. But it said, levy may be made upon the accrued salary or wages of any officer or elected official of the United States, the District of Columbia, or any instrumentality of the United States by serving a notice of levy on the employer Well, it was obvious that the employer here was the United States. And I said to myself, well, how can a statute having to do with levies, why does it single out a government employer and a particular asset belonging to that employee, rather? Why does it single out a government employee? And I couldn't understand why it was there, but I know nothing is an accident. Why does Section 6331, when it talks about levies, as I said, single out a government employee and only singles out a particular asset that they can take by a notice of levy? And then Section 6331B says the term levy means to seize. And after 20 minutes of struggling with this, as a matter of fact, there were a few people in my living room at the time, and we just couldn't figure it out. And then suddenly a light went on in my head. And the word levy means to seize. Now, the only property the government can seize is property already in its possession, because it already has it. So the government had to prepare a document where it can give to a person, telling that person, look, the money we owe you, we're going to apply against taxes that you owe us, because they can't seize it. Now, a seizure, a levy, is between two people, an IRS agent who takes your car. So there are only two people involved in what is known as a levy. That is a seizure. An IRS agent goes, takes your car, and he gives you a notice of seizure. But a notice of levy, which represents 90% of what the government uses to seize property, they have to go to third parties. They go to banks, insurance companies. They send the bank a notice of levy. Now, what they do is they send the bank a document which the law says only applies to the accrued wages and salary of a government employee. And why does the bank turn it over? Because when the bank gets a notice of levy, here's what it looks like. On the back of the notice of levy, the government presumably writes Section 6331. But they start with paragraph B. They leave off paragraph A. So the banker or the third party would not know that the notice of levy doesn't even apply to the bank. In addition, on the back of the notice of levy, they write surrender of property subject to levy. Now, a levy, as I said, is a seizure where an IRS agent goes and seizes property. When the bank turns over money, it's not turning over money subject to levy. It turns over money subject to a notice of levy. Now, before there can be a levy, the law says a notice of seizure has to be given to the person whose property is being seized. For instance, on page... Let me get that. Okay, on page 114 of the Federal Mafia, you will see a notice of seizure. In Section 6502 of the Internal Revenue Code says the date on which a levy on property or rights to property is made shall be the date on which a notice of seizure is given. So there is no levy unless a notice of seizure is given. Now, when an IRS agent goes to the bank, he doesn't seize the property. He doesn't give them a notice of seizure. He gives them a notice of levy, and then the bank may write out a check. So this is not a levy. So on the back of the notice of levy, where it says what can happen to people who don't respond to a levy, it says any person who fails to or refuses to surrender any property subject to levy, the only persons in possession of property subject to levy are IRS agents. So the penalties that are on the back of a notice of levy really only apply to IRS agents who may seize a car and not give it to the government. So they are required to give the property that they seize to the government. So let me tell you what the government does. The government has prepared a document which it sends out to banks, insurance companies, and third parties. They leave off the document that portion of the law that might explain that this document doesn't apply to the situation, and then they put on the back of the notice provisions of the law that can apply to third parties, only to IRS agents. In other words, a notice of levy is a totally fraudulent document for which any IRS agent who sends it out should be arrested for mail fraud. Now, what do you do about it? I'll show you how to stop and prevent notices of levy. Suppose your bank gets a notice of levy. Now, if you look at Section 6331, it says, if any person liable to pay any tax neglects or refuses to pay after 10 days, the secretary shall send out a notice. It doesn't say the IRS can send out a notice. It says the secretary Now, notices of levy are not sent out by the secretary as Bob Rubin. Now, what you want to do, the minute your bank gets a notice of levy or a third party, you give your bank an affidavit. We have prepared this affidavit. It's in our lien and levy packet. And you tell the bank that the person who sent out the notice of levy was not authorized to send it out. You give them an affidavit saying, and then you, with another letter we prepare, where the bank, you ask the bank to write to the IRS agent who sent it and ask him for his delegation of authority from the secretary to him to send out the notice of levy, because you can point out to the bank, it says the secretary shall send out a notice of levy. It doesn't say the IRS. It doesn't say any particular agent. And you give the bank your sworn affidavit. Now the bank has a fiduciary obligation to treat your affidavit seriously. So the IRS uses a notice of levy to seize property from banks, insurance companies, brokerage firms. And you'll get a copy of the notice of levy. The first thing you do is you give the bank or the third party an affidavit. You say, be acknowledged that I, the Understein, being of legal age, and you say revenue officer so-and-so, whoever signed the notice of levy, was never authorized by the Secretary of the Treasurer, pursuant to 26 U.S.C. 6331, to send out such a notice. Now, when you give them that affidavit, that's a sworn affidavit. Now, a sworn statement takes precedent over an unsworn statement. The notice of levy is not sworn to. Now, the bank is duty-bound. You also give the bank a letter pointing out that I'm writing in connection with the above notice of levy you received from revenue agent. Put his name in. I have enclosed with this letter my affidavit attesting to the fact that revenue officer so-and-so is without delegated authority to send out such a notice. Attached to my affidavit is Internal Revenue Code Section 6331, the code section pursuant to which the notice was sent. As you can see, it only says that it shall be the lawful for the secretary to collect such tax. And you're pointing out that you didn't get the notice of levy from the secretary. And then we prepare a letter in which you ask the bank or third party just to send a notice to the agent who sent this out to you, asking him from his delegation of authority to send out the notice. As a matter of fact, here, I have right here a delegation of authority. Here's a delegation of authority that special agents have. And you can see special agents are authorized to seize property used in violation of internal revenue laws. In other words, the only delegation of authority that an IRS agent has is to seize a still, to seize something used in violation of law. As I said, they can seize a still, but they can't seize money in payment of taxes. Before they can seize your money in payment of taxes, they got to take you to court. They got to get a judgment and then get either writ of attachment or writ of garnishment. The Fifth Amendment to the United States Constitution doesn't say the government can deprive you of property except for taxes. The government, under the Federal Debt Collection Procedures Act, must get a court order. Now, they've been getting away with it because the lawyers are so incompetent and because of the help they get from the federal judiciary. But here's what you do. The important thing is you give a sworn affidavit to the bank that that person is not authorized to have sent this out. Now, the bank or any third party has a fiduciary obligation to check and see whether the person is authorized. Remember, a notice of levy is not a court order. Now, normally, you only have to respond to court orders, and it will say, based upon the court orders you to turn this over, and if you don't turn it over, then you're in contempt of court. But a notice, trust me, a notice from an IRS agent, you can just wrinkle up and throw in the ash can. What you want, as I said, I know an employer who got a notice of levy from the IRS, and he called the IRS, and he said, look, I got this notice of levy. How come paragraph A was missing? And they hung up on him. And he made 2 such phone calls, and he just threw it away. Now, if the bank turns over the money, or if the third party turns over the money without a court order, and without sending that letter, without establishing whether or not the person is authorized, you sue the bank. Now, you can get triple damages for breach of contract. You sue the bank, I don't care if it's, you sue them in a state court. And the issue that you raise on your lawsuit is that they turned over the money to somebody who was not authorized to receive it. And then the bank will have to bring in the IRS agent and he'll have to produce a delegation of authority, which would have allowed him to send it out, and he can't produce it. Now, before, I used to have a letter that we sent to the bank explaining that a notice of levy is not a levy, that you don't have to honor it. As a matter of fact, there are documents right in the IRS's revenue manual. As a matter of fact, right in the book we explain here, on page 112 of the Federal Mafia, right out from the IRS's legal reference guide, it says, where a notice of levy is served upon a third party and there is no response within 10 days, it is to be followed by a final demand. And then it ends up, in the event that a final demand is not responded to, a suit will ordinarily be required to reach the property. A suit will be required. In other words, if the third party doesn't turn over the money, sue them. We're going to have to sue them. Now, they won't. Basically, what this says is if we can't intimidate the third party into turning over the money without a court order, then we just won't get the property. Now, why do people turn over money to the IRS without a court order? Because the typical businessman is afraid to be audited, and he thinks if he doesn't do what the IRS tells him, he'll be audited, which basically is extortion under color of law. Now, one of the things I would say, if you get any kind of a letter from the IRS saying you owe the money, one of the things you can do is go up there with this notice, or they tell you if you don't pay the amount of money, we're going to seize your property. So I would go up there and I would say, well, remember we discussed under section 6001 and 6011, you're told to comply with regulations. Now you go up there and you say, okay, I got this letter from you telling me that if I didn't turn over my money, you're going to seize my property. Is that correct? Okay, I got my checkbook here. All I want you to do is show me the regulation that says I got to pay this, and I'll be happy to write you out a check right now. Not unless you can show me a regulation that says I got to pay attention to what you tell me. Show me the regulation, and they won't have a regulation that has the force and effect of law. Now, if the IRS threatens to seize your property, or you can trap the IRS agent in several ways. You can say, now, let's say the IRS sends you a notice that if you don't pay this amount, he's going to seize your property. They send you a final notice prior to seizure. You say to the IRS agent, okay, I want to pay this. What is my liability? And let's say he says you owe him $30,000 or whatever it is. Is that what I'm liable for? Yes. But suppose I can't pay it. What can you do to me? Well, the IRS say, well, we can seize your car, we can seize your house. In other words, if I don't pay you a portion on this, you can seize my car? Yeah. Well, in that case, I'm certainly going to pay you. Now, you can actually take your checkbook and you start writing out your checkbook. Who should I make the check payable? The Treasury Department, Internal Revenue. You fill it out. And you say, well, there's one thing. I want to make the check payable for $10,000 or $15,000. I want to put the code section in here that makes me liable for the tax. Now, would you help me out? And you can open up your code right here where it says liability for tax. Here it is. You would have it already tabbed. And you say, you know, I'm having a problem here finding it. You open up the code section. You can see very clearly it says liability for tax. Then you say, you tell me the code section. You just said I was liable for this tax. And if I didn't pay it, you're going to seize my property. Well, I'm going to pay you. Just tell me the code section that makes me liable. There, he won't find it. So then you can say, then what do you mean you don't? If you just told me I was liable, I got it on tape. You told me I was liable, and if I didn't pay you a tax for which you were going to seize my car? Bring your manager in here. Maybe he knows the code section. Call Washington. Maybe they know the code section. Now, he just told me, and I got on tape, that he was going to seize my property unless I paid a tax for which I was liable. Now he can't even produce the law that made me liable. You know what he just did? He broke the law, and I got it on tape. Because the minute he does that, now I turn to the last tab here, which is 7214. And as a matter of fact, I'd go up there and I'd photocopy this statute and I'd leave it with him. Let me read you what section 7214 says. It says offenses by officers and employees, unlawful acts of revenue officers or agents. It says any officer or employee of the United States in connection with any revenue laws, who is guilty of any extortion or willful oppression under color of law, or who knowingly demands other or greater sums than authorized by law, shall be fined not more than $10,000 or imprisoned not more than 5 years. So what do I have? I have on tape an IRS agent telling me that he's going to seize my car if I don't pay this liability, right? Then I ask him to produce the liability. He can't. What did he just do? He just violated this criminal statute. And I could go right down to the U.S. Attorney's Office and swear out a criminal complaint. Instead, what I would do is I would make a tape of that interview and send it to the district director and say, I just went down and this is what your agent threatened me. He's breaking the law. I was willing to pay if he could show me where I was liable. He couldn't show me where I was liable. He violated Section 7214, and if you bother me anymore, I am going to charge you and him for violating Section 7214. So it's not that we are without weapons, except that the American public doesn't know about Section 7214, and they assume that they're liable, and they assume that IRS agents have the authority to do all this. The other thing I will tell you is this. If an IRS agent attempts to take your car, seize anything, you resist. You absolutely resist. If he goes to take your car, you can tell him, you put your hand on that car, if he doesn't have a court order. In rare cases, now this only has to do with income tax. This doesn't have to do with Bureau of Alcohol, Tobacco, and Firearms. Let me read from the IRS's own manuals, which they violate all the time. Listen what it says. This is from the IRS's own legal reference guide. It's paragraph 332. It says, during the course of administratively collecting a tax, an occasion may arise where service of a levy or notice of levy is not adequate to seize property. Listen to this. Listen to this. However, it cannot be emphasized too strongly that constitutional guarantees and individual rights must not be violated. Property should not be forcibly removed from the person of a taxpayer. So if they try to take your car and you shove them away, they cannot use force to take your car. Such conduct may leave a revenue officer open to an action in trespass, assault and battery, and conversion. Okay? It says, if there is reason to suspect a failure to honor a levy or an interference, the matter should be returned for legal action against the offending party. Let me tell you how the IRS wants to seize your car. The IRS wants to go up, ring your doorbell, say, look, we're taking your car. Now, what they actually do many times is they stop and they stop at the sheriff's office or the police station, and they say, look, I have a guy here, I have this notice of seizure I got to serve, and we think there's a problem here. Now, the policeman or the sheriff, he wants to stay on a good side of the IRS too. And he thinks what he has is something like a court order. He doesn't. Now, if it was a legal document, he would have an FBI agent, a U.S. Marshal, but he knows he doesn't. So he cons the local police and the local sheriff into accompanying him. Now they'll ring your doorbell. Now the person comes to the door and the IRS agent says, I have a notice of seizure for your car. And the person sees a policeman there and he's afraid to do anything. So he doesn't do anything. And he doesn't resist. The person says, give me the keys. And many times they'll actually give him the keys, or they'll call a tow truck, and they'll take the car away. And the IRS agent can then claim, well, this was an administrative levy. I mean, we didn't use any force. We just told the guy we're going to take his car, and we took his car. In a situation like that, if he shows up with the police, you ask the police, what are you doing here? Did I violate any local statute? What are you doing here? Do you usually go enforce federal law? And in other words, it said, does your supervisor know you're here? What law have I violated? What are you here for? Well, I'm here with him. Well, what is he here for? Do you have a court order? As a matter of fact, you say, then come back with a court order. You're not taking that car, and you physically resist. The IRS agent takes the car, and if he resists back, he is committing, you can get him for assault and battery and trespass. In other words, the final analysis is this. The government needs a court order to take property, but they never use a court order. What they do is they rely on the duplicity and the malfeasance of lawyers to turn over money without court orders, and they rely on the ignorance of the public who think that IRS agents are operating legally. But in any given community, if anybody called the sheriff, and if the sheriff made one call to the IRS in that community saying, look, if anybody from your office comes down here and attempts to seize any property and they can't produce a delegation of authority from the secretary, I'm going to arrest that person for illegal conversion and extortion, and that would stop all IRS seizures in any given county. Before I go, there's one other thing I'd like to mention. You know, the IRS has filed over 1 million tax liens. Actually, they call them notices of liens because they're not actually liens. They're filed as notices of lien, and the IRS hopes that your county recorder files them as a lien, but they're not really a lien. But in any case, these notices of liens violate both federal and state law. So all these liens the IRS have filed, again I want to repeat, violate both federal and state law. And how you can prove this? Well, in Title 28, you will find the Federal Debt Collection Procedures Act. It's in Section 301. And you will see that before a lien can be filed against any American, only U.S. Marshals can file liens, and they need writ of attachments. And then if you check the garnishment laws of your own state, you will find that there are 35 states that have adopted the Federal Uniform Lien and Registration Act. In 35 states, in their statutes, say that all federal liens have to be certified by the Secretary of the Treasurer or his delegate. 35 states say that. Those states that haven't adopted the Federal Debt Collection Procedures Act use the same wording anyway. So it says that tax liens have to be certified by the Secretary of the Treasurer or his delegate. Now, none of the IRS liens are certified. That's number one. They say notice is hereby given, and they're always signed by a revenue agent who has no delegation of authority from the Secretary to file liens against anybody. So what you do is you take what they filed against you, which will not be certified, and not by anybody delegated by the Secretary of the Treasurer, and you show that to the county recorder, and you show her that she's filed a lien against you, which, according to state law, should not have been filed. If she doesn't remove the lien, I would also go then to the county attorney and point out that the county has filed a lien against you that, pursuant to state law, should not have been filed. Because they've done this, they've interfered with your credit. Maybe you can't get a credit card. And if they don't remove that lien, you could sue them under the tort laws of your state. Tort means an injury. And by recording a lien against you that should not have been filed, they've injured you, and you can sue them under the tort laws. And as a matter of fact, you can even sue the revenue officer who filed the lien because he clouded your title. It's called slander of title. Again, let me repeat, all IRS liens are filed in violation of both federal and state law.